Today, the oil market is in a state of silent tension. Brent and WTI are heading for their second consecutive week of gains, with profits nearing 2%. We're not seeing an explosive rally, but something more dangerous, a market that's starting to build a higher price floor. So, who's driving this movement? First, the Federal Reserve. Many analysts expect a potential rate cut in the coming months. What does that mean? Lower borrowing costs, more economic activity, more consumption, and sooner or later more demand for energy. Oil is moving ahead and is already pricing in that scenario. Second, geopolitics is once again setting off alarm bells. Tensions between the United States and Venezuela are escalating. Any measure affecting internal stability or Venezuelan logistics puts part of its export production at risk. The market knows this. When a key producer enters a zone of turbulence, prices factor in a risk premium. Third, the Russia-Ukraine front continues with no clear resolution. There's no peace agreement, no real relief from sanctions, and the energy infrastructure in the region is a constant target. Every attack on pipelines, terminals, or refineries is a sign that the global supply could remain fragile. At the same time, there's a curious message from the physical market. Saudi Arabia has cut the price of its crude for Asia, acknowledging that competition is fierce and that there are still signs of oversupply in some markets. In other words, the world hasn't run out of oil, but it is learning to live with more political risk and more volatility. So, what does this combination really tell us? That the price of a barrel today isn't just a number on a screen. It's the sum of Fed expectations, tensions in Venezuela, a war in Europe with no end in sight, and strategic decisions from producers like Saudi Arabia. From Trend Oil Vision's perspective, the lesson is simple and brutal. If you're only looking at the chart, you're already behind. The real game is understanding why the price is moving, who might lose production, who needs to sell at a discount, who uses sanctions as a political tool, and how traders react to every headline. Because in the end, the price of oil isn't decided in a single country or on a single exchange. It's decided at the intersection of geopolitics, finance, and physical flows. And anyone who doesn't understand that intersection isn't managing risk, they're gambling. That's exactly what we at Trend Oil Vision try to break down every day. What's behind the number, and where the risks and opportunities are that almost no one else sees. This is Trend Oil Vision, understanding oil like a professional. If you like these kinds of videos, give it a like, follow us, and subscribe. Thanks.